So, you're at the checkout, ready to finally buy that thing you've been eyeing for weeks. You see the button, Pay with PayPal Credit. It seems like the perfect way to split up the cost. But you stop. Your finger just hovers there as a single question pops into your head. Is this one click going to wreck my credit score? It's a fear a ton of people have. We've all heard that applying for new credit is a bad idea. But what's the real story? Today, we're going to break it all down. What if I told you that clicking that button is basically the same as applying for a brand new credit card? But what if I also told you that a different PayPal button could have zero effect on your score? The difference between these options is massive, and knowing it is the key to making a smart money move without all the stress. Let's get into it. All right, let's get right to it. Will applying for PayPal credit affect your score? The short answer is yes. When you apply for PayPal credit, the lender, a company called Synchrony Bank, does what's called a hard inquiry or a hard credit check. Think of it as them asking for a detailed look at your financial report card to see if you're a good person to lend money to. This hard inquiry gets noted on your credit report and can cause your score to dip by a few points. This isn't just a PayPal thing. It's standard for most credit cards and loans. Now, a single hard inquiry isn't the end of the world. For most people, the drop is small and temporary. However, that inquiry will stay on your credit report for 2 years, even though its actual impact on your score usually fades after about a year. The real trouble starts if you apply for a bunch of different credit lines in a short amount of time, which can make you look risky to lenders. Getting approved is just step one. PayPal credit isn't a one-time thing. It's a revolving line of credit, which works just like a regular credit card. This means Synchrony Bank will report your activity to the major credit bureaus every month. This is where your financial habits really come into play. If you make all your payments on time and keep your balance low compared to your total credit limit, that's called your credit utilization. You can actually build and improve your credit score. It signals to other lenders that you handle your money responsibly. But on the other hand, the risks are just as real. Missing payments or maxing out your credit can seriously hurt your score. And if your account ever goes to collections, that negative mark can stick around on your report for up to 7 years. This is where it gets really interesting, because PayPal has other ways to pay over time, and they don't all hit your credit score in the same way. First up is PayPal Pay in 4. This option splits your purchase into 4 interest-free payments over 6 weeks. When you choose this, PayPal usually just does a soft inquiry. A soft inquiry is like a quick background check that doesn't affect your credit score at all. On top of that, your payment history with Pay in 4 typically isn't reported to the credit bureaus. So, while it won't help you build credit, it won't hurt your score either. Next, you have PayPal Pay Monthly. This is designed for bigger purchases and is more like a traditional loan, with payment plans from 6 to 24 months. Applying for Pay Monthly can result in a hard inquiry, just like PayPal Credit. If you're approved, your payment history will be reported to the credit bureaus. This means that making payments on time can help you build your score, but missing them will definitely bring it down. So, to put it simply, PayPal Credit and Pay Monthly are tools that can build your credit, but they start with a hard inquiry and require responsible use. Pay in 4 is the worry-free option if you want to avoid any impact on your credit score. Feeling a little more confident now? If this breakdown helped you out, do me a solid and hit that like button. And for more simple tips on handling your money, make sure you subscribe to the channel. Now, I'd love to hear from you. Have you ever hesitated before applying for a store credit or a service like this? Drop your story in the comments below. So, let's go back to that moment at the checkout. That PayPal credit button is a true credit application with real effects. It triggers a hard inquiry that can temporarily knock down your score, but if you use it wisely, it can help you build your credit over time. If you'd rather not touch your credit score at all, PayPal's Pay in 4 is your best bet, thanks to its soft credit check. At the end of the day, none of these are good or bad. They're just tools. Understanding how they work is the first step to using them to build the financial future you actually want. Thanks for watching.